The Construction Market Guide is designed to provide timely information to construction executives to help them attract, train, and retain the most highly skilled workforce possible, to understand input costs and the direction of those material prices so they can bid as competitively as possible, and to understand the broader economic environment so they can forecast and make solid decisions for their firm.
After coronavirus shutdown, construction has reopened in Pennsylvania, but we still see national unemployment claims at very high levels. At the peak of the unemployment claims data, we saw 10 times the new unemployment filings recently here on March 28th relative to what we saw during the worst of the Great Recession in 2008. So very high levels of unemployment continue to plague the country across different industries. Because of the lack of demand, we see materials prices drop substantially. Oil prices down 61% year over year. Asphalt paving mixtures down 7% on the month. Iron and steel 3 or 4%. Lumber about 11% declines. And so we continue to see reductions in cost for input materials for construction projects. We also see a reduction in cost for those looking to borrow money to perform construction projects with interest rates at near all-time lows. The 2-year Treasury, if you lend money to the U.S. government for a 2-year period, you're getting a 0.18% rate of return on that. And even 30-year bonds are only paying 1.44%. So for borrowers, they can borrow money at extremely low interest rates, making it an attractive environment for those who do want to do or need to do construction projects. The stock market has somewhat recovered if you look at large companies as measured by the S&P 500. After a substantial drop, they've rebounded a good part of the way. So if we look at a 1-year return, we're still positive 3.3% on the S&P 500. Real estate and small companies got hit harder and haven't rebounded as far. Negative 21, 22% returns for real estate, negative 18% returns for small companies over the last 12 months. Looking at new housing starts, those have also fallen precipitously, and the construction unemployment rate has spiked. So the name of the game now really is uncertainty. How quickly will we see things reopen and rebound across different industries? And will we see a resurgence of corona outbreaks and a second round of shutdowns, resulting in a W-shaped recovery as opposed to a more consistent expansion following the recession that we're in now? If there's things that we can do to help provide perspective on your personal investments or your business, please reach out to us. We'd love to chat. Thanks so much.